Good evening, everyone. My name is Lavine Hemlani, and I am the founder and CEO of an education platform called Accelerate. We are a leading edtech company that helps upskill Hong Kong and Asia with skills like fintech and artificial intelligence. And I started this company because as a former financial service professional, I really felt like there was a lot that could be done when it came to innovation. And the key thing that was bottlenecking that innovation in the financial services industry was not a lack of intention, but education, awareness and cognitive feedback loops that allow for a financial services professional to move forward in their career and in their lives. So it's my absolute pleasure and honor today to have two very wonderful panelists, Hugo and Nelson, and we hope to spend about 30 to 40 minutes discussing the future of wealth management, and hopefully towards the end we can have some audience participation. This will be recorded for those who have to leave early or who were not able to join and put on our YouTube channel. And yeah, it's a pleasure to have everyone here. Please feel free to, over the course of our conversation, come up with any questions. I want to make it very casual. I want to make sure that everyone gets as much out of it as possible. And let's get started. So Hugo, Nelson, before we get started into the actual questions, could you give me just 30-second background into both of your backgrounds and maybe just a quick 30-second on the startup that you guys are building?
Yeah, thanks, Lavine. Really appreciate this. You hosting this event. Yeah, so a little bit about myself. I actually recently moved back to Hong Kong. It's actually less than 2 years ago. And before I was in Hong Kong, I worked in New York for many years. So I worked in several financial institutions like Citibank, Bank of New York Mellon, Asset Management, and Bank of America Merrill Lynch. And my sphere of work was mostly in asset management and stock option valuations. So I know about mutual funds. I worked in the mutual fund industry for several years. And after I moved back to Hong Kong, I decided to start this company called ETFcool.com. So it's essentially a digital advisors, and we focus on ETF investments and also thematic investments. So that's basically what we're doing right now.
Fantastic.
Yes.
Great. Nelson, maybe a quick 30-second from you.
Yeah. Hello. Hello. My name is Nelson. Yeah, I graduated in US, and I was growing up in Macau, and I moved to Hong Kong for 1 year, and my career background is worked as an auditor in Big Four accounting company, as an external auditor or internal auditor or business consultant to advise the company for risks and internal control stuff. And I have some investing background when I have spare time to do that. And I've been in the investing in Hong Kong stocks, exchange market and bonds market for maybe over 5 years. And after I left Big Four company, the Big Four accounting firm, I joined ETFcool because this is a startup company, and I really like to involve in investing and fintech work. Yep.
Fantastic. Great. So again, reminder to the audience, please ask questions, please engage with us over the course of the next 30 minutes. I have a few questions planned, and right after that, we'd love to open up the chat to everyone else for some questions. Okay, so my first question to Hugo would be the future of wealth management. It's changing really, really fast. Could you tell me a little bit more about how you think wealth management will evolve in the next 5 years? Like, what are the trends or the areas of wealth management that you think, number one, are going to change a lot, and number two, that you're really excited to see a change in?
Yeah, I think the wealth management industry in general, I think in the next couple of years the industry is going to transform itself into more of a customer-centric, right? So instead of these big mutual fund companies, based in New York or Hong Kong or London, manufacturing these mutual funds to you, I think it's going to be a little bit more toward tailor-made solutions. That's one thing. I think it's going to be more choice. The second trends that we're going to see in the next couple of years is going to be the fees is going to be much lower, especially in Asia, in terms of the management fees that you're going to give to the investment community, the investment managers or the big mutual funds or the banks. I think in America, in the United States, the fees has already came down significantly in the past 2 years. Like, for example, if you look at Fidelity, right, they don't even charge any commission to trade, zero. That's like not even happening in Asia right now, right? You still have to pay a cost to trade for the transactions. But Fidelity, you know, based in New York, they charge zero in commission. I think Charles Schwab is going into that direction as well. It's probably zero already in terms of commissions. So the brokers, they're not even making money in terms of your trading activities, right? They're not making money on that. They're making money on other things like managing your portfolio or loaning you, you know, capital in order for you to trade. So that's the second thing. And I think the third thing is the trends is really like, I don't know if you guys heard about this concept of decentralized finance. So it's going to be more driven on, you know, blockchain technology in terms of you, the individual, instead of this huge, you know, mutual fund manager managing your portfolio, you would be able to have more saying in terms of, you know, how to manage your portfolio and what company to choose in your portfolio. And then you can, you know, put that onto the blockchain. We call it, you know, in the US, we call it decentralized finance or DeFi. I don't know if you're, I mean, this is relatively new. It's really setting the trends on a lot of different, like, you know, product in the next couple of years. You, the investor, will have more say of like which company to pick. You know, are they sustainable, right? You know, the ESG concept, right? Environment, socially responsible, and governance, right? Are they making a lot of mess in order to, you know, create this product? Are they a polluter, or are they focused on green energy, things like that? I think these are the, you know, three trends.
Fantastic. Nelson, do you have anything to add there on the 3 or 4 major most exciting transitions and transformations that the wealth management industry is going to see, particularly in the Asian context, since you've been here for a while?
Yeah, I agree on Hugo's talking. Right now, the transaction fee is getting lower and lower. Like actually in Hong Kong, some brokers already zero commission fee for buying stock in Hong Kong, and some brokers even is lifetime commissions, zero commission, and they just like the customer to have maybe some add-on features from to add some add-on features on those platforms so the brokers can gain some earnings from that. And also, I think the right now the trend is like because individual stock is quite risky for us, because there's many different kinds of risks, like the company and some maybe political or economic different kinds of risks. But right now the trend of investing is like investing in the ETF, the exchange traded fund. Like in the US right now, over 2,000 exchange traded fund and different kinds of company and thematic investing, they combine into one exchange traded fund, and so people can buy and sell the exchange traded fund through the exchange, like individual stock. And this is the trend in Hong Kong and in Asia right now, I think. Yeah.
Got it. So Hugo, you mentioned some very interesting trends here. And I think it mirrors the way music and education and healthcare are moving. It unbundles a university degree and offers it online, or it unbundles, you know, buying your old record labels and your CDs, and then now you can have on Spotify your playlist that you customize. even with healthcare, the insurance is becoming very personalized. So could you tell me a little bit more about what that means for the customer, right? And I'm sure there are people out here who have wealth management decisions that they have to make. What does that mean for a customer if you no longer, and this is pretty cool, because it hasn't changed in hundreds of years, this model of wealth management. What do you think it really means? Let's take it a step deeper. What does it really mean now that a customer could have greater control and greater say and more personalization when it comes to wealth allocation?
Right. Yeah, so that's why we started ETFcool.com. So it's a digital advisor, essentially. And, my firm's, the viewpoint of my firm is that I don't want to have an actual person sitting in front of you, right? And then, and then provide the financial or wealth management services. Because in some cases, humans are fine, but in other cases, when you have a human interaction, that really would actually have a lot of human biases, right? When I say human biases in terms of wealth structuring is, it could be, like your wealth manager can be emotional, could be, right? Or, the wealth management could be biased on certain products that they would like you to purchase. So I think the trend is also more like personalization, right? You would be able to buy exchange traded funds that's globally diversified instead of a manager picking one or two stocks for you or picking one or two mutual funds for you. In ETFcool.com, we have 12 to 15 different exchange traded funds available to you. And each of your portfolio eventually, I guess in the next couple of years, is going to be specifically tailor-made for you. The system would be able to do that for you. The system would know about you. The system is going to learn about you. And we're going to train the computer, right? We're going to teach the computer, from the machine learning capabilities, artificial intelligence angles, to teach the machines and to let the machine know how to create that portfolio. But right now, we're not doing that exactly, but in the future, that's what we're going to do. Like we're training the machines. And so that's what we're doing.
Fantastic. Nelson, what are your thoughts on what this means for the customer when you have the ability to be way more personalized and move away from the human-centric cognitive biases that Hugo mentioned?
Yeah, the bias could be like because maybe as an advisor, they may have different kinds of gains or benefit from selling different kinds of products. Like the portion they can get, maybe the commission. There are different ways of commission for different kinds of products. So I think that could be one of those personal advisor bias. So I think if like in the ETF Cool, we provide the customer with the financial product by using the computer, the artificial intelligence and machine learning, those kind of techniques to provide them the product, so they can calculate which is the greatest benefit for the customer in terms of risks and rewards. Because if some kinds of customer, they may aim for higher risks, so the ETF course can provide them the higher risk ETF inside their portfolio, instead of maybe some conservative investor. They may aim for some maybe just 2 or 3%, maybe lower than 2%, something like that, return per year. So we can provide them the conservative ETF, like the bonds or other dividend kind of stock ETF. So I think based on the ETF Cool, the algorithm can provide them the rather is unbiased solution for them.
Okay. So Hugo and Nelson, I mean, there's a lot of companies that are realizing the benefits of investing in artificial intelligence when it comes to things like robo trading or AI-based recommendation engines for music, for content. So it's really fascinating that it becomes very useful in wealth management. Can you tell me more about the rise of artificial intelligence and to the extent that you can outline how data will allow for a hyper-personalized, much better, much enhanced version of wealth management for the customer of tomorrow in Asia? You're on mute.
I have to unmute myself, right? Can you hear me?
Yeah.
You can,
Yeah,
right?
loud and clear.
Okay, good, very good. Yeah, so we love artificial intelligence. I think it's one way that we can help, the investment decisions. But I think it's still in the early stage, so that's why we're testing out different aspects of the artificial intelligence, machine learning processes. In the U.S., there's a large amount of data, but in Asia, there's not as much as data as comparable to the United States or Europe. Like for example, exchange traded funds is still relatively new products in Asia. But in US, I believe the last time I saw the flow, there's more people investing in exchange traded fund than traditional mutual funds, right? I think, I mean, I don't remember the exact number, but there's more people who are investing in exchange traded funds than traditional mutual funds. And there's so many other like new exchange traded funds coming to the market on a weekly basis in the United States, also in Europe. But in Hong Kong, it's actually picking up, right? That pace of creating new exchange traded funds. So I think the artificial intelligence questions, we really have to take it one step at a time. And then gradually the machine's going to learn more about how to analyze, different stocks or exchange traded funds, how to gather the data and put them into, sophisticated manners in order to help the investors to, to do investing. So it takes time, it's going to take time, but I think it's going to be really fast, right?
Could you elaborate? When you say it will take time, but it will be
it's going to
really
take time
fast.
to, learn about, for the machines. It's not going to be completely 100% right now, right? It's not going to be like the machine's not going to be able to pick like all these different exchange traded fund and put them into a portfolio. But with what we are doing is we are teaching the machines to learn about it. The machine has to adjust to the, because like when you think about markets, right? Nobody knows exactly what's going to happen tomorrow. That's what I believe. But I think the market is efficient in a sense that because you have a lot of different liquidities, right? That if you have discrepancy into the market, you will be able to correct the prices, through the market mechanism, right? So the machine, I think artificial intelligence has to learn about that. That's one thing, right? And then also learn about what happened in the past 100 years. Let's just say, with like different financial crises, right? How would the market react to, certain financial crisis, right? For example, the biggest one of the, I remember, September 11th, right? So the market really dropped really fast, right? So hopefully there'll be no such events going to happen, something like that in the future. But, it could be like a terrorist attack, or it could be like the European debt crisis.
Black swan, right?
Black swan, exactly. The tail, we call it like in stock option analysis, right? We call it the third deviation, right? The standard deviation, the tail risk. Like when is the next thing's going to happen? I don't know, but everyone in the financial world is trying to get themselves prepared for that, right? And I think artificial intelligence is going to take some time to learn about that, to see how they would react to it independently, right? Without like a human interaction. I think that's the key. That's one thing that's important to, for the machine to know. Yeah.
Got it.
So
Nelson,
yeah.
Nelson, you were studying mathematics, right, at UC
Yeah.
Berkeley, and so
Yeah.
I'm sure you also have some thoughts on the mathematical underpinnings of how AI will be able to transform the wealth management industry. And I think it'd be really helpful, not just the statistical models, but to try and understand what does AI do for the customer, right? For people who are listening today, how should they think about what their future is going to look like because of AI from a wealth management standpoint?
Yeah, I think AI can help a human can compensate what human may have some mistake to in investing. So I think for AI, AI can provide the objective thought to in investing, like because we run the model. If we run the mathematical model or the statistical model, so we can have some factor or variables like the GDP or some different kinds of variables like the money flow in, money flow out. Those kind of stuff can create a model. So we can maybe forecast what is going on tomorrow or what's going on the future. The stock market, will the the stock market go up, or will the stock market decline? Those kind of stuff. I think we believe we can foresee some maybe we can foresee some insight and some trail from the mathematical way. Yep.
Mm-hmm. Okay. I just want to take a pause here. So if any of the audience have any questions right now, now would be a great time. We're approaching the end of the first half, the first 30 minutes, which is my questions on the general industry and how AI is going to shape it. If you have any questions, now would be a great time to put your questions onto the chat room. And in a few minutes, we're going to get started on the Q&A part. So my final question to you both before we open up to Q&A, Denise and everyone who's out there, Can, Angel, Yana, Annie, please feel free to ask some questions right now because there's such a large topic. But when you think about wealth management and when you think of AI and things like ETF Cool, what do you think are some of the biggest challenges that companies like yours and customers that are working with companies like yours will have to overcome as they move from these mutual funds and traditional wealth management vehicles to the wealth management vehicles of the future?
I think the trust is also important, right? The fact that you have to trust a new system, right? And also a new method of delivering of investment advisory services. And also you have to trust in, this product called exchange traded funds, right? Because, it's evolving, right? Exchange traded funds, we have new ETF, we have technology ETF came out just last week. Hang Seng Focus, Hang Seng Technology Index, CSOP. In the US, we have new funds that focus on beta or alpha, or just picking just stocks. So I think trust is important because most people don't know about these, right? If you go out to the street and ask people what's exchange traded funds, they're like, what is that, right? They don't know. Probably, most people have never heard of it. They never use it, but it's have a lot of capabilities, right? One, diversification. Second, sector focus. Third, it moves with the market. There's a lot of different benefits. The fees are lower, like the traditional mutual fund, the fees are higher. Like insurance products, those, you have a lock-in period, but ETF Cool, we don't have a lock-up period, things like that. So, we use a lot of data, we analyze a lot of data, we're training the machines to learn about artificial intelligence to get it ready. So a lot of different benefits. So, yeah.
Nelson, trust is a big one, especially in this era of data privacy.
Especially in, like in Asia, right? A lot of people, they want to see who's out there. They want to like chat with the person, the advisor, and then, build up a relationship. We still want that relationship, but it's not going to be like on a human basis. So.
Excellent. Nelson, what do you think are going to be some of the biggest challenges for a AI-enabled wealth management firm?
I think the biggest challenge right now, I think, maybe let's I focus on ETF Cool. Yeah, I think the maybe the biggest challenge right now for like the US market. There are many different kinds of ETF, like the bonds, the commodity, and stocks, and different kinds of stuff. But in the local market right now, because the ETF right now in the Hong Kong market is just 200, and mostly is focused on stock, and is the passive. Is the passive tracking ETF instead of active ETF. So I think the products, the diversity of products, maybe right now limit the market of ETF in Hong Kong. So I think the Hong Kong market actually is catching up the global market. Like Hugo said last week, Hong Kong market already issued the Hang Seng Tech Index ETF fund, but this is just the first step. And I think there are more and more different kinds of ETF, including the active and passive ETF coming up to the market. So the AI or the investor can choose what they want in the ETF market for Hong Kong, in Hong Kong. Yeah, not only the US or other marketplace. Yeah, I think the biggest challenge right now is the limited number of ETF can be chosen for the market. And when the ETF come out to the market, it takes time to gather the data, so to let the AI learn. So I think it takes time to the ETF market in Hong Kong will grow. Take time to grow. Yeah.
Okay.
I was talking on mute. Yeah, I just want to add on this because
go for it. Please.
Like some of the most liquid ETF in Asia, in Hong Kong, they only have like maybe 5 years of data, comparatively speaking to some of the ETF in US, like SPY. That's one of the oldest ETF in the United States, tracking the S&P 500. It was started in 1992 or something, so 1993. So you have a lot of data, and the indexes also, right? The indexes in Europe or in United States, it's like 50 years, 100 years. So that's one thing that we're lacking in Asia, but we are hoping that, we're expecting in the future, like in the next couple of years, the trends is that exchange traded funds, they're going to issue, a lot of issuers are going to issue more exchange traded funds, and our machine's going to learn more about that. So right now, for example, ETFcool.com, we focus on global diversification. So when you open an account in ETFcool.com, it's going to be US dollars denominated, most likely, and we'll be able to do the trading for you in the US, in the New York Stock Exchange market, to allocate exchange traded fund for you.
Excellent. Okay, great. So that wraps up the first 30 minutes of our seminar, and thank you again for some of your insights. I find them very fascinating, and it really is a major transition. And this industry hasn't changed in hundreds of years, and now in the next 5 years, everything's going to change. So
yes.
It's
30 minutes already. I didn't even realize.
Yeah.
Time flies,
right?
Goes really fast.
Yeah. So anyone in the audience right now, maybe Denise, feel free to either unmute or ask your question in the chat. And we have about 20 minutes left on this webinar for some Q&A. So now would be a great time. Anyone in the audience, please don't be shy. We can learn a lot from these two panelists today, especially on wealth management, especially as you think about your own portfolios or questions you have on the future of AI in this industry. Both Hugo and Nelson are very knowledgeable about this, and they're building an incredible company right now to go solve some of the core problems in this industry.
Thank you, Lavine.
Yeah.
Hello, good evening. Can you hear me?
Yeah, thank you.
Okay.
Token on, please. Yeah. The mic is yours.
Yeah, I would like to ask for a question. Is that about the ETF business in Hong Kong, especially in Asia, because actually over the I think that ETF, a lot of providers are planning to expand the business in Hong Kong or Asian market for a long time. But just like earlier this last month, we saw that the Vanguard just decided to exit the ETF business in Hong Kong. So I just wonder, a lot of people talking about the benefits in ETF. But over time, actually, we observed that the retail investor actually do not very interested in this business. And over the last few months, from my experience, as the US market is really hot, instead of buying the ETF, actually lots of investors are trying to seek for individual stock or maybe for some active management mutual fund. I just wonder when you talk about the ETF business may become the main investment stream in the Asia and may take time to catch up with the Euro and in the US market. Actually, what's the turning point you may see of this development? And also for the question is that I also feel that trust, just like what Hugo said, is that trust is a very important factor. And over the last 20 years, I feel in Hong Kong is that a lot of independent financial advisors trying to develop this business in Hong Kong. But at the end of the day, a lot of investors, even for the ultra high level client, they would like to seek the advice from active advisor. So I just wonder for the AI, what do you think about the human role in the future in the wealth management industry? How about the job division between the AI and also the human? And that's the two questions I would like to ask. Thank you.
Okay, great, thank you. Yeah, I mean, well, I mean, ETF, you can still have active investment in ETF. So ETF doesn't mean that it's completely passive. So I think that's one thing that we need to be making sure. I think, you know, in like, for example, Nelson, you had this company, right? ARK, you talked about that, the active investment.
Yeah.
We talked about that yesterday.
Yeah, the ARK, yeah, actually not individual investor not only can they can select the individual stocks to invest in the US market, but also they can select the active ETF like the ARK invest. The ARK invest is managed by the fund managers called Catherine Wood. She is right now the hottest fund manager in the US right now because her funds like her 5 active ETF all are investing to the future technology. Those ETF, the year-to-year return is over 40 to 50%. So it's quite amazing that not only individual stock can achieve this higher return, but the ETF also can achieve this. And also for your the first question, I think you mean the Vanguard right now move out from Hong Kong to, but they actually are moving their headquarters from Hong Kong to
Shanghai,
the Shanghai office. Yeah, right now I think they can see the China market has the biggest potential. Tremendous growth and potential for their company. So I think the ETF will still flourish in the coming future. Yeah. And
I mean, I don't know exactly the details of why they move out of the Hong Kong office, but you know, definitely that's one thing. You have the China market that's so huge, and they're indexing a lot of different equities, and so they're partnering with like other local firms in China, and so yeah.
Okay, thank you. So for the second question, just ask for what's the role of human in the wealth management industry in the future?
I think there's definitely going to be a human interaction because that's the human touch that we're talking about, right? I don't think it's going to be like, I guess like 10 years later or 20 years later, right? You're referring to like long term, right? I think there's still going to be a human touch because human wants to see emotions, like they want to sort of like befriend with another human, right? That's like a social spectrum of the entire human species, right? So I think it's not going to be completely machine, right? You know, for example, when you talk about driving a car, right? I think still humans going to want to drive a car, right? In the future, I don't think it's going to be completely driven by robots. And I think that's going to be the same thing for the financials or, wealth management industries. I think, AI robots is going to take a lot of portion of the entire industry, but I don't think it's going to be completely, eliminated. Like you driving a car, or like some people they have a robot cooking for you, right? I mean, does that really taste good? I don't know. I mean, is it going to be 100%, in your kitchen, it's going to be robots? I don't think so. Like in 20 years, I'm talking about like, long term, like 20 years later. So I think, AI, big data and all this stuff is going to assist us in terms of making good decisions, minimizing risk. I don't think it's going to completely, minimize the risk in the stock market, right? Because stock market, essentially, it's a risky business, right? It's a risky assets, right? But you want to be able to minimize your risk to the point that you're able to tolerate that. And I don't think that's going to go away. I'm not saying like artificial intelligence or machine learning is going to completely eliminate that, stock option, right? The tail risk that I'm talking about, the standard deviation, third standard deviation. That's still going to be there because we don't know, like, for example, the Black Swans event that Lavine was talking about. Lavine mentioned Black Swan, right? We don't know that cannot be eliminated, I don't think, in the entire global markets. So, yeah, so I think we're still going to have a human touch, essentially, I think. I mean, but I don't know if it is going to be like, how big is that? But, probably we're still going to have human interactions.
Thank you.
Yep.
Fantastic. Great. We have another question. I'm really glad, Token, on you that we're asking multiple questions. This is how we get the most out of these sessions,
Yeah.
Jeff Lee has a question. Jeff, would you like me to ask for you? I guess so. Jeff says, thanks for the insightful sharing. My question is, what's your opinion on how the stock market will change? E.g., will the stock market be more fluctuated? And if more and more companies will rely on AI, which might be trained by similar set of data? So I think what he's saying is, what
is the market? What's the first one?
What are your thoughts on the volatility of the stock market
in the long term or in the short terms? Because some economists said that the long term, stock market's going to have no volatility, but I don't believe that. But
that's like a Benjamin Graham.
That's like a Benjamin Graham thing, right? Yeah. In the long term or something. Yeah.
Warren Buffett. Yeah.
Yeah. Exactly. Jeff, you went to the good school.
Yeah, I used to work in hedge funds a long time ago. Yeah. But
that's not that long ago, right? No, you're still very young.
3 years ago, yeah.
Yeah, that's not that long ago compared to me,
Jeff, are you referring to the volatility in the stock market short term and long term, and are you referring to the AI training set for short term or long term, Jeff? That'd be good for us to clarify before we proceed with the question of yours.
Maybe I would just unmute my mic.
Perfect. I love it. Go.
Yeah, so my question goes on maybe a long-term effect because I believe the training, the AI stuff is not might not be that popular in the coming 1 or 2 years, but definitely it would be the future of the whole industry. So my question goes to like the long-term effects of companies or even the stock markets if more and more companies are using AI. And because maybe every company are using similar set of data, I'm not sure about that. But given the fact that they are using similar set of data, will the market be more fluctuate? Or what is the change?
I think it's gonna definitely minimize some volatilities, because a lot of volatilities right now is caused by what? By human emotion. They're scared, right? We have the virus situation, right? And when they know about the virus situation is going to spread really fast, what happened? People panic, right? They start selling. But in the long term, that we're going to have vaccine. It's not going to be that bad. I'm not saying it's not going to be that bad, right? I don't know. But it looks like it's slowing down, right? Then why would people stop selling? Because it was, what is that? What happened? Because of people's fear. So you have to conquer that fear. And I think, because of what you're saying, the artificial intelligence and all this stuff is going to minimize the fear, I think. Nelson, do you have any thought on that?
Yeah, I think the AI, you mean most of people use the similar set of data to train the AI. I think they may have different kinds of data set or parameter variables to train it. So I think the market volatility still have in the market, but I think in the long term, given the situation right now, I think like the quantitative easing, the government intervention, those kind of stuff, the market will only in the long term is rise, is go up, and right now is but I agree on Hugo that market has volatility because people scare, people and people's greed, people scare. So the markets have different
and also
kinds of
greed.
volatility.
People are fearful and also
Yeah,
greedy too.
Yeah, greedy too.
I have to make sure. Yeah,
Yes.
people are greedy too, right?
That's another Warren Buffett quote.
Yeah, exactly.
So I think in the long term,
when others are greedy and be greedy when others are fearful.
There you go.
Good company, the market will still go up. I think in the long term, yeah. Given right now the interest rate is so low, and there very few peer of investment tools. So I think the market will still in the long term go up. Yeah.
I think central bank is addicted to this very easy money, like quantitative easings, QE 3, 4, and
they can't stop, man.
I don't think they can stop. You're right, because the debt is keep piling up, right?
Yeah.
They are keep going to easing the money, and the interest rate is going to be very low for the foreseeable future. And when interest rate is low, that's going to help the stock markets to go higher, right? Because people can borrow money to buy stocks. The risk aptitude is going to be increasing. So yeah.
Fantastic. Yeah. Jeff, was that able to address your question?
Yeah, sure. Thank you so much.
No, thank you.
For asking,
that was
Jeff.
A great question.
Great. Annie Louie has a question. Annie, do you want to ask the question, or should I read it out for you? Okay, let me read it out for you then. Annie asks about robo-advisory. So based on the current maturity and market perception of robo-advisory, if she were to launch a robo-advisory solution, what do you think would work? Fully automated, hybrid, or advisor-facing platform, and why? And the second question, or let's do it step by step. She's got 3 questions. So number 1, what sort of solution do you think she should launch if she were to launch a robo-advisory?
My model, right? The model that we're running ETFcool.com is a hybrid model. So it's not completely automated, because I was talking, you need time to train the machines, right? And the model that we're using is hybrid. And what is this? Advisor-facing platform. That's the third one. I think that's the capability of doing that in the future as well, that you can actually Zoom with your advisors and discuss your financial plannings. I think it's a mixture, hybrid. I don't think it's, my platform is not fully automated. Our platform, ETFcool.com is not fully, I cannot speak to other, I cannot speak on
But you find that approach works better than a fully automated approach?
Yeah. I cannot speak on, on behalf of other competitors. I don't know the platform. I don't know what they do inside. But right now we are hybrid. As I said before, we need time to train the machines. We need time to teach the machine what to do, right? Yeah.
So it's like that middle ground, yeah.
Yeah. And I think that's a good question. Good thing, right? Advisor-facing platform. I think eventually in the future we can have something like that too.
Yeah, no, it's interesting. I mean, even for us as an ed tech company, we're using data and AI to understand how governments and enterprises learn with us, and we capture as much as possible. But that doesn't mean you replace teachers overnight. You augment them. You find the way where man and machine can work together and create human-computer symbiosis, which is a fascinating phenomenon and worthy of a webinar of its own.
Yes.
The second question from Annie is the audience that's here today. What value-added functions for experienced versus newbies should you offer? So I guess, what are the value-added functions that ETF Cool is offering?
Nelson, do you want to touch that?
Yeah, I think like the because in ETF Cool right now we are starting to do the one function is called the academy, which is like to teach the newbie investor to know how to invest their money, like stock, bond, how to differentiate ETF and different kinds of investment product, and we are doing that in the podcast way. So I think there's a good value adding function to the website to let more people to get involved in the investing world. Yeah.
Okay, fantastic. And then her third question, do you see any potential partnership opportunities between Robo advisory service providers and traditional financial institutions like insurance providers and banks?
Yeah, definitely. Definitely. Well, I mean, I see some of the financial institutions, they're adapting to Robo advisory services. Some, not all. Most of them, they resist because they don't like the business model, right? It takes away their revenue from the traditional financial services to this new business model. And for insurance providers, yeah, I think so. I think there's can be
in what way?
In what way? I'm not very well versed with like insurance products. Like you mean the life insurance, term life insurance, and all this stuff. I don't know much about it. But because essentially they're all like financial services, right? They're all they're planning for your future. So I think there could be some collaboration. Nelson, do you have anything to add on that? Insurance providers?
Insurance provider. Yeah. I think yeah, definitely is one of the future way. Maybe collaborate with other advisory service providers for financial institutions. But I think there may but still we need to figure out is there any regulatory requirement like the insurance or the SFC, though they have different kinds of regulation to maybe limit any maybe different kinds of license need to get for us to we need to get in order to collaborate with different financial institutions. So I think that's one of the future possible way here. Yeah.
And Annie, I think these are good questions. Yeah. Are you currently? You're very smart. Are you currently in Lavine school, the Accelerate?
I don't think so.
Oh, okay. You should. You should.
That'd be great. Yeah.
Yeah.
Yes. Any last question, and I think this is the last question for the evening. It's been a really fun webinar, but I want to make sure we stick to time. Yes. So Annie's last question is, Nelson, why do you opt for podcasts instead of MCQ or simulation for educating users about ETF?
Yeah.
What's MCQ stands for?
Perhaps marketing of some sorts.
Okay.
Annie, could you clarify first what is MCQ? Multiple choice
MCQ is more like, because education, if you want to do a step-by-step manner, I was thinking, should we do something like what Coursera is doing, chop the knowledge up into biteable sizes, and for MCQ to check the knowledge, whether they do know what they are trading and how should they trade, how do they read those graphs for references when choosing what ETF to opt for. Yep.
Yeah.
Thank you. Thank you for bringing your question. Yeah, very, very good questions.
Yeah, I think yeah, podcast is just right now the starting way right now. But I think simulation or we will come up to make some video or simulation to how to trade or how to educate the audience about the ETF and how to differentiate, how to select the ETF those we are on the track of that, yeah, right now, to make different kinds of video or simulation, yeah.
Sorry, I have a very short follow-up. When you record those kind of broadcasts, what kind of speakers or like instructors would you consider hiring? What is your criteria?
Maybe Hugo, you can.
Criteria.
Yeah.
Well, I mean, the first thing you have to know what you're talking about, and I think you have to be able to connect with the listeners. Podcast is only listening, right? There's no screen, and you have to be able to provide, you know, the materials that's like really fit with the listeners, right? Because only like 15 minutes. Your Nelson's podcast was like 16 minutes, so you have to, because like our attention span is also very, very short, right? So yeah, you have to be like tailor-made, you have to be very on point, specific, you know, get to the point. And I think, yeah, those are the characteristics for a good podcasting person. Yes, instructor.
Yeah. Have the specific theme, yeah.
Specific theme, or the topic has to be on point. Yeah, because they come into your podcast, right? Because they're interested in that specific topics. Yeah.
Thanks a lot.
No, thank you.
Thanks.
Thank you. Those are good questions.
Thank you.
Okay, so I have the last question in mind for myself, and then we'll wrap up in a couple of minutes. Thank you again to the audience who've been very, very filled with questions and curiosity this evening. Hugo, Nelson, what advice would you give to people, young people, you know, who in this period of major transformation, transition, volatility, what advice would you give? I know one can't really give advice in a unsolicited manner, but in general to people who are, you know, in their early 20s, who started their career, who, you know, the millennial generation, who typically doesn't save much, who wants more experiences. What sort of advice do you have, Nelson and Hugo, about approaching wealth management? Not particularly the wealth management advice, like, oh, do stocks and bonds, but about approaching that. You know, how can they think about things like wealth management, people in their 20s and 30s?
Yeah, I think they have to be first open-minded, you know, accepting new product, new solutions, such as, you know, Robo advisory services or ETF or, you know, beta-based ETF, a lot of different new products, right? Or actively, Nelson talked about actively managed ETF. Yeah, they have to be open-minded, I think, in terms of approaching wealth management. You have to be educating yourself. You have to do a lot of homework because there's just a lot of products out there, right? And you have to do your education, your homework, because it's so very easy these days, right? You Google it, you can like just learn a lot about it. You know, ETFcool.com, we have Academy, as Nelson talked about. We're going to produce a lot of educational materials. And then finally, you have to have a patience, you know, because, you know, from an investment perspective, right? I don't believe in like short-term gains, right? You buy the stock and the next week you're going to sell it. I don't think anybody should be doing this, but a lot of investors, they do that, unfortunately. And you have to have patience. And so I think that's my spiel. Nelson, do you have anything?
Yeah, I think first, I think the financial knowledge, the background of the financial knowledge, people should learn those fundamental stuff. Yeah, it's boring, but still need to know how to read the financial statement or for the fundamental analysis, technical analysis, those kind of knowledge, and also to read or watch the video about read the biography about the famous fund manager, the asset management people like Warren Buffett, George Soros, or Mark Minerini. Those people are the toppest fund toppest assets wealth management people in the world, and like Hugo said, open-minded. Yeah, accept the new stuff, because right now the stock market, the asset management is investing, the whole industry actually is investing the technology, the new kind of stuff, the future stuff, not the old or traditional things. So I think it's need to open-minded. Yeah.
Fantastic. Great. We're at 8:30, so I just want to give a round of applause, which I will do. I can't do it on Zoom right now. Oh, wait, I can. I've given a round of applause.
Wow.
Thank you to everyone.
Thank you, everybody.
Thank you. Annie is also giving a round of applause. So I think we all learned from each other. Tonight was fun. A copy of this will be recorded and put on the Accelerate YouTube channel. And yeah, I'm sure we'll also partner with ETF Cool again on the educational stuff and do a lot of good things together in the future. So thank you all.
Absolutely.
If you have any interest in learning more about AI and FinTech in general, feel free to reach out to Accelerate. This is our email address, and we are an EdTech company, and we help Hong Kong people be ready for the future. And if you have any interest in learning more about ETF Cool, I highly recommend you reach out to Nelson and Hugo. Maybe Hugo, you could just write your email address on the chat really quickly.
Oh,
and
let me see how
then
I just type, right?
Yeah, just type your
Okay.
your email address.
Yeah, I got
and
it.
We will wrap up here. Fantastic. Thank you again, Hugo, Nelson. It's been a pleasure. Thank you again for your questions, especially Annie and Tokinan.
Those are great
and
questions.
yeah, until next time, stay safe, stay happy, stay healthy, and till next time.
All right.
Okay.
Bye.
Bye.
Thank you.
Bye. Bye.
Bye.
Bye-bye.